Well, thank you. Perfect. Thanks, Beth, very much for the kind introduction. That was very nice of you. I'm very excited to be here. Again, my name's Heather Rinkol. As Beth had mentioned in her intro, been with the company for going on 12 years, just shy of 12 years. The entire time that I've been here, I have been in the pet industry. So, have definitely grown my network, have worked with a lot of facilities throughout the US. So again, just very excited to be touching base today about financing and really what today's going to be is very high level, mostly because when it comes to financing, it's really kind of a case by case basis. You know, everybody's facility is different. Everyone's scope of project financing needs and whatnot are going to be different. So this is really just to kind of help you prepare your business for that expansion project, that real estate purchase, also to kind of what a bank looks for, and then dive into a few of the SBA options that are available. Um, Let me see if I can get this to switch here. There we go. Okay. So Beth, if you can ever not see my screen, let me know and I'll make sure that I pause. Also, if anyone happens to have any questions, if you can go ahead and type them in the chat. And if I get busy talking, Beth will stop me and we'll make sure that I try to answer those the best that I can. So feel free to ask away. Banc of California, first of all, quickly who we are. And as our name suggests, we are located in Southern California. That's where all of our branches are located. We do have a branch in Colorado, as well as in North Carolina. So we are on a national footprint. The division I'm a part of, we have our business development team, underwriters, closers, scattered throughout the U.S., and we are our national small business lending group. We are an SBA preferred lender. So the two main types of products that we do offer are SBA loan products. We do we don't do any conventional financing, but certainly if you guys have a question, I would do my best to answer, on the conventional side of things for you. If not, I could certainly try to put you in contact with somebody on the conventional side. Um, as an SBA preferred lender, we are a 7A lender. We are a 504 lender. Those are our two main types of products. We can underwrite, approve, and close in-house. We all of the funds come directly from us as the bank. We do also service all of our loans post-close, so we're not going to sell anybody off in the secondary market. And we do have some national banking services available as well to our current customers. So kind of how I wanted to start off is just preparing your business. And it's really cool that Beth invited me to talk with you guys here at the end of February. It's really hard to believe we have 2 months of the new year underneath our belts already. But this is the time of year that everyone starts preparing their financials for the previous year. And this is the time of year that you talk with your accountants and your CPAs and you actually are in person with them. Most of the time you're in person. So it's kind of twofold. It's an opportunity to discuss any future plans that you may have coming up with your accountant or your CPA. As soon as you can, start talking about those plans. If you're planning a big new build project, if you're planning a big expansion project or opening a new location, it's so important that your team of people behind you know what those plans are so they can kind of help you set up for success. And I'm going to talk about this quite a bit, but banks are going to look at, cash flow, available cash flow. How strong is your business to help support the new debt? And that's going to help you, get the financing to get into those bigger buildings, the new locations, and in turn, obviously help bring in some more revenue for you. Just make sure that you keep, personal and business expenses separate. Credit cards are a big one of this. Your profit and loss and balance sheet. These are very important pieces. And you'd be surprised how many people that I come across that don't quite have that profit and loss statement completed. They're months behind, which I totally get as a small business owner. Your mind tends to go elsewhere. But if you are looking at some sort of a project, it's important to stay on top of those because the bank will ask for those as well. So right now, if we were to look at somebody for a project this time of year, we're going to want your 2024 end of the year profit and loss statement. We're not so concerned about the first couple months yet of 2025. But as we close out every month, we get further into the year. We will start requesting your interim financials for 2025. So again, that's why it's important just to stay up to date on those. Liquidity, what kind of cash on hand, do you have available to put towards the project? That's something to look at, and to prepare yourself for as well. If you have a big construction project, inevitably you're going to have to outlay some cash for that. Just to even get that project started. So again, it's just kind of important to try to plan as much as you can. I bring up zoning and permitting, and I guarantee all of you on the call and all of you watching who weren't able to join us today know about zoning and permitting because in the pet industry, that's one of the areas that can sometimes be the toughest to get over as far as hurdles go. It really depends on where you're located and what your city is like. But make sure that before you buy that property, you go into a contact, with a business owner about it, that you know that it's even able to be approved for what you want to run out of that building. And that's why, and I'll get to this process here in a little bit about the financing process, but that's why it's important to really make sure that you have permits in place and that you are fully approved by the city before we close in the loan. So that way, you know for sure that they can start construction right upon closing. Personal financial statement, that's going to be your personal assets and liabilities. It's important to stay on top of that as well. Everyone has personal debt, so don't worry about having a house payment or a couple car payments or student loans or whatever it is that you happen to have. Everybody has that. So at the end of the day, what we're really focused on is we want to make sure that when your business brings on new debt, that it can still pay you what you need as the business owner. You can still, pay your monthly obligations as well as service the new debt. So that's why we're going to ask and kind of dive in on the personal financial side as well. Team is very important, and you guys know this as business owners as well, that having the right team in your business is going to make you successful. Having the right team behind you when you're looking at some sort of a big expansion project is so important. And that team of people, especially if there's construction involved, architect, contractor, the bank, CPA, whoever it is that is working with you and that you choose to work with you on your team, all know each other. Introductions are so important. Specifically in the pet industry, all of us tend to know each other, which is great. We've gotten to know each other through trade shows, just through networking, through working on different types of projects. So just know that there are people specific to the pet care industry, really in every aspect of a project, of opening a business, of expanding a business. And again, we all tend to know each other, so it's important to make sure that you make those introductions, that everybody knows who they are. The other piece of this is timing. If you're looking at opening a second location and it's going to require some outside construction, and you're up north and in the wintertime, it completely stalls and you have a deadline to get that building completed before winter. I say that because I'm in Nebraska and we're just finally finishing our winter. So that one's fresh in my mind. But make sure that everybody understands about the timing and what are some deadlines that you have. Are you buying from a seller that has a deadline coming up of May 1st that you have to have the building? The bank needs to know that, the contractor needs to know that. So there's just a lot of moving pieces that when everybody knows each other, it makes it go a lot smoother. Your business plan. And I feel like a lot of people hear about business plans and it can be very confusing. It can be very kind of overwhelming what all needs to go into a business plan. I know sometimes people feel like they have to go out and spend a bunch of money on creating this big elaborate business plan to present to a bank or whatever lender they happen to be working with. And that's really not the case. Any lender is going to tell you the most important pieces in their lending criteria that they're going to look at. And it doesn't have to be in some big fancy report. The biggest piece of it, of what a business plan really is be prepared to tell your story. Everybody has a story, and as a small business, they're all unique and they're all amazing stories. So where did you start? How did you start your business? You're growing from point A to point B. What is that going to look like for you? Who are the competitors in your area? How do you handle seasonality? We all know that, there's seasonalities and ebbs and flows throughout the year for pet care facilities. What does that look like for your particular facility, and how do you overcome those obstacles? If you're opening up a new location or you're doing a big ground up construction project in a different location, who are the competitors around you? How is that going to impact you? Another big piece of it is, are you adding additional services to your building, to your business? How many people are you going to have to hire? And what are those services going to bring as far as revenues go? Which brings me into my biggest piece is going to be projections. So really anytime that you're opening in that new location, expanding, your business in one aspect or another, a a bank or a lender, excuse me, is going to ask for those projections. Really, what we're looking for is if you're an existing business and you have previous tax returns. On one of the first pages of the tax return, how they have listed out your expense categories, that's really what we're looking for in the projections. So if you open in year one and you're bringing on, you've never had grooming, you're bringing in grooming, what is that going to do for your revenues and what's that going to do for your expenses and what is your net income going to look like? So projections are very, very important. And I would say 99% of the time, whether it's a cash flow deal or a projection based deal, we're going to look for at least 1 to 2 years of projections. So that's something to think about on your piece of it as well. Repayment ability, that's just knowing your financials, knowing how you've been trending over the past few years. What are your salaries and wages? How are you managing expenses? Out of the different services that you offer, what are the revenues that come in for those services? So, just knowing those and being able to talk um, to a bank about those is going to be a big piece of what your business plan is as well.
Did you see Stephanie Shipley has a question. She would like to know for a second location, is it better to lease and renovate or buy the real estate?
Well, funny you say that. My next slide, Stephanie, happens to be buying versus leasing. That's perfect. It's really hard for me to put an answer around that. It's really going to come down to a few different things. When it comes to buying versus leasing, the location that you're in, I mean, the area of the country that you happen to be in is obviously going to be a factor in it. What are real estate prices even like? What are rental prices like? The other part of it is your stage of business. So have you been open for, 3 years and you're looking at that second location where your first location is still kind of ramping up? It may be, easier for you to start leasing before you jump into a big building purchase. Are you an established business that have a lot of customers coming through the door? You really have your processes in place and you know what you're doing. You're ready to duplicate that in a second location. Then buying and bringing on, some of that real estate debt into your world may be a good option for you as well. That's where talking with your accountant CPA is going to be important. And how we work with our borrowers is even if we have somebody coming up and saying, I'm considering opening a second location. I don't really know if I can afford it or not. We run what we call a cash flow assessment on our customers without running personal credit, without kind of diving into those types of details. And really what that does is it allows us to, based on their financials, say this is how, this is the strength of your business as is, and this is what available cash flow it is you have to kind of play around with to help support that second location. If they're not liking what those numbers are, or vice versa, if the numbers are super strong, that's a pretty powerful tool. It's going to help them. So I would encourage anybody listening, to reach out to a lender. Myself, I'm very happy to hear with that, or your CPA, your accountant, and they can easily run some of those numbers for you as well. There are some definite benefits, of course, to buying. You pay yourself. A lot of people now will have a separate real estate holding company entity set up, and then their business basically pays them rent. So you're paying yourself rent versus somebody else. There's tax benefits. A lot of people, build that asset and use it for retirement. So there's definitely some pros. It's just, figuring out the timing of it that matches best with your business is going to be the key there. And I hope that answered your question, Stephanie. A couple of the different types of SBA lending programs. For those of you who aren't aware, SBA is Small Business Administration. It is a U.S. government program designed specifically for small businesses. And the two main types of loans within the SBA world that we work with is the SBA 7A and the SBA 504. The 7A is where we tend to lend more in the pet industry. And the main reason for that is because it's a very flexible loan. You can really include everything into it from the real estate purchase to equipment purchases, hard, soft of construction, soft costs, everything along those lines can be wrapped into that loan. It's one loan. You pay it directly to the bank. I'm trying to think. Refinancing is available for that as well. And I'll kind of dive into some of those details here shortly. The 504 program is strictly commercial real estate, construction, large equipment purchases. All of those are going to be designed or specific for the 504. So if you're looking at a big land acquisition, typically we do the 504. We will look at it as an option on the 504 for our really large construction projects. And they do have a really great refinancing program available as well that just recently changed. So what are each of these programs kind of used for? So, and this kind of goes through some different stages of business that you may or may not be in. For those of you starting up or acquiring an existing location, it's your very first location. Expect that you're going to have to come in with some cash. We call that the equity injection into the loan. Typically, that's 10%. And you can do that for, like I said, your startup. It's good for a leasehold, location if you're not buying the building. If you're just deciding to lease, you can include renovation money in that as well. So that's kind of for that very first location. If you are already an established business and you're looking at bringing on that additional location, this is where you can start looking at lower cash injection financing options on an SBA loan. We can look at it as an expansion basis, which basically means that if you have a good established business, you have positive trends, positive cash flow, everything looks good on how you're running that business. There's a very high chance that you can come in with, little to no cash to buy that second location or open up that new location, which means that you can hold on to your own cash, leverage it, keep it in the bank as you're growing and expanding. Purchasing commercial real estate, and the one in the upper, right-hand corner is going to be for an established business. Let's say you're leasing right now and you want to stop leasing and you want to purchase your own building. This is where, again, you can do lower cash injection financing. So, and a lot of times people, when they think about buying a building for their commercial business, they think they're going to have to come up with, 15, 20, sometimes 25% cash equity to even put it into the loan. And that's not always the case. SBA definitely is designed to help businesses grow and expand. And with that, they have procedures in place that allow us to offer financing that's, the best case scenario would be you come in with $10,000. And we do that quite often, help people buy a building for little to no cash in. Refinancing is huge right now. Obviously the interest rates went skyrocketed. They're starting to come back down now, which is great. They trickled down a little bit towards the end of 24. So we have been getting a lot of requests in to kind of help refinance out of some high rate debt. SBA does allow now recently some changes, refinance SBA with another SBA loan. There are some debt to income requirements that we do have to meet. But as long as we meet those, we can, look at locking in a lower rate for you and look at extending out the loan term. Which of course is going to help that monthly payment to be a lot more manageable and provide you, with some monthly cash flow savings as well. The SBA 504, this loan is designed a little bit differently. This is going to be, again, this is all real estate. This is not business acquisition, anything along those lines. This is all real estate construction. So basically what this is you have, your project loan, whatever that total loan cost is. You have 50% of it. I'm going to answer this question before I dive into this. Can I refinance from another high interest loan? Absolutely. If you have debt outside of like an SBA loan or a commercial loan, and it's eligible, we can certainly look at, debt consolidation or refinancing as well. So a lot of those are case by case basis. I will have my contact information at the end. Feel free to email me and ask the question. I'll be more than happy to look into that for you. On the SBA 504, again, this is all real estate construction based. Basically, how this loan works is it's broken into three different parts. 50% of the loan comes from the bank. So in a situation of working with Banc of California, 50% of the money would come from us. 40% of the loan of the money would come from the SBA local CDC office. And then 10% would be the equity cash injection coming in from the borrower. That's going to equal your 100% of your loan. So at the end of the day, you're basically making two different loan payments. You're making one to the bank and then you're making one to the SBA as well. The interest rate is typically lower on this. You're not going to get any lower on the cash injection. That is what it is on an SBA loan. Like I said, typically we do SBA or the 504s on larger projects. That's where it tends to provide some more benefit. would like to make a note that if anyone's considering a 504, or if, for example, a local bank or somebody's talking about a 504, that you make a discussion with them about the appraisal. These loans are very appraisal dependent, which means that when we go to do that as complete appraisal of a new build ground up construction project that's not completed yet and we're basing it off of plans, if that appraisal happens to fall short because of all the extra costs that is associated with construction, that's where the borrower may have to come in with some extra money. So I would say is if you're considering a 504, let's have a conversation and we'll definitely walk through those details with you. And again, you could refinance any type, real estate debt. This is only real estate debt, construction debt with the 504. Get a lower interest rate, longer loan term. It can definitely help with that monthly cash flow. Um, so as a recap here, keep your financials up to date. Now's the time of year. If, I would say within the next, 3 to 5 years, anywhere from immediately to 5 years, you're looking at some sort of a project. It would be really important to make sure that you file your tax returns by the deadline, and try not to do extensions if possible. The only reason I say that is because banks are going to require them, and they're going to make their lending decision based on your previous returns. So we want to make sure that at least when we look at the last 3 years of tax returns, and then your interim profit and loss and balance sheet, that all of those are kept up to date. In regards to construction, whether it's a leasehold location or whether it's a commercial real estate building that you're buying, that construction does not start until we close in the loan. Several reasons for that, but the easiest one is if you want your loan to close, hold off on any construction because we want to make sure that there's no liens and everything is nice and clean when we go to close the loan. Zoning, again, your contractor, your architect is really going to look into this for you as well. Just make sure you keep an eye on zoning. Closing times will vary based on scope of project, but I would say from start to finish, you're probably looking on an average of about 45 to 60 days. If it's a big, extensive construction, you're probably looking more on average of the 60-day mark, if not a little bit more. What Before we can close a loan, we want to make sure that you have building permits in place, that you have city approvals in place. Um, your contractor, you have the final contractor bids, the final plans, everything that are in place. So when we close on that loan, they could start construction immediately the next day if they choose to do so. So there's so much that goes into the process, and it kind of goes back to your team of people, making sure everybody knows each other, that we understand deadlines, we know what your goals are, so that way we can get you across the finish line together, and meet those deadlines for you. I would also encourage you to hold off, if you are looking at a huge project coming up, hold off on any major purchases, additional vehicles, boats, extra homes, all that kind of stuff. Just make sure that you try to keep, your credit, make sure that you keep, your personal financial statement as clean as possible, because those are all going to be determining factors in getting that loan for your business. Banks do check criminal history. I mean, we obviously look at every piece of it. So my advice on that, credit, personal debt, business debt, is just disclose everything that you can up front. It's gonna, it's better to take care and have those conversations up front than it is to have some sort of a surprise during the lending process. Typically, there's no good surprise that comes up during the lending process. So we just want to make sure that, we try to get as much of those conversations up front as possible. And this just kind of goes through some loan closings that we've done in the pet industry. It just kind of shows you a little bit about the 100% financing, that it is true. I'm not just here saying it. There are definitely some options for you guys out there to have lower cash injection financing. I mean, don't think that in order for you to expand your building, or your business, that you have to, have so much money saved in the bank and that has to go straight to the loan. It doesn't. I would encourage everyone to, do your homework, find the best loan, find the best lender, find the best architect, contractor, whatever it is that happens to be in your area or nationally. Have the conversations, get a term sheet from them, and make sure that, they're the ones that are going to get you from start to point A from point B. And I really encourage you, and I know Beth just this year, she has a lot of webinars coming down the road, and they're all people specializing in your industry. So I would really highly encourage you to listen to those webinars, attend the conferences, and that's really how you're going to meet the network of people that are going to help you, meet your business goals. Way easier than just going with somebody who's never worked with a daycare center or a pet resort, certainly. So again, these are just some examples of some loans that we've done throughout the U.S. A lot of them are existing customers that have expanded in one aspect or another. That's where you see the 100% financing. Um, Sometimes on a big construction project, it's required that the borrower come in with some money. In that situation, the $4.4 million one in Florida, I think their cash injection was right around 5%. So you can also see that in a recent refinance that we've done. We were able to do a 45% cash flow savings. So there are options out there. Certainly ask the questions. Let someone take a look at your financials and see what they'd be able to come up for you. And that is really what I have today. Is there any additional questions? I was trying to look in the chat here and I don't see anything else that came up.
Thank you so much, Heather. That was actually really informative. I've never sat in on one of your talks, but
Yeah, yeah.
that's
You're welcome.
that's great for me to know, just as somebody who works with a lot of different pet care professionals. So I appreciate
Absolutely.
you taking the time to talk to everybody.
No, thank you very much for having me. Like I said, I love the industry. I've been in it for a long time. Always happy to answer any questions for anybody. Keep a hold of my contact information and reach out whenever I can help.
S. Gran would like to know, how do we reach out?
Oh, my contact information is here. It's my cell number. You can call, text. You can email as well. Hopefully, you guys can still see my screen. Any way that works best for you works for me. Typically, people will send me a text message or an email and we'll get a call lined up.
And I'm going to post the recording of this webinar on KurandaPro within the next few days. So if anybody missed the beginning or wants to go back and re-listen, then that'll be available shortly.
Okay, great. Thank you very much for having me. It was great seeing
Thank
everybody.
you. Bye.
Take care.